let's talk about the three key lessons take away from Berkshire Hathaway annual meeting. So you will be intrigued to know what Warren Buffett said in the last meeting, and here is what he said. My name is Arpit Arora. I'm India's leading personal finance expert and passive income coach, and I'm on that quest to change the middle class of India and transform their financial life in such a way that they are able to have the potential to follow their passion. They have the focus to follow their passion. They are not distracted by money because they're creating enough passive income, and most importantly, they're able to live with inner peace and joy. And that, my friends, happens by winning the game of money. That happens when you upgrade your financial IQ, and that most importantly happens when you are committed to achieve financial freedom in your life, because it cannot happen without a commitment. And it is my commitment to make sure you get all the support that you need to walk and achieve that destination. The first thing he said, that the markets have been extraordinary, and sometimes it is quite investment oriented, other times it is almost totally a casino, a gambling parlor. So do you know what times is Warren Buffett talking about? Do you know what is he referring to? No, he's talking about the last 2-3 years. He's talking about when the COVID happened, how the market bounced back without any valuation, how the money was pumped into the markets like there is no tomorrow, and how that affected into, and also war is a major contribution to that too, but both of these things together created this inflation that we're in. And there is a term for this, it's called stagflation, where there is stagnated high inflation, which is what we are likely going to go through. One of the some research that I've done in this area and some articles that I'm reading suggest that this inflation is not a temporary phase, it's going to be there for longer, which means that interest rates will be going up, which means that higher the interest rates go up, the harder it becomes for companies to grow, because that inherent and demand hasn't really picked up as quickly as the inflation has picked up. So it puts the economy and the people running the economy in a catch-22 situation, because they have to keep up high interest rate for the inflation, but the demand, if it doesn't pick up, then the economy slows down and becomes harder for people to make money. So today's time is the perfect storm, and this is why the markets have fallen, because they've understood all of these things, which is why we want to invest in these times to make the most of it. So the casino time, I think, is over, and this is the investment oriented time that has started. That is my understanding of it. He also says very interesting thing, and I would agree with him, commenting on people like me only, where he says ki a lot of financial advisory businesses charge for investing skills yet deliver closest index results. Everybody does the same thing because they're worried they will lose their fees if they're too different. And this is where I take that pride of making very contra market investments. When people are investing in stocks, we're investing in bonds. When people are investing into aggressive investments, we're investing in gold. When the markets are falling, now we're talking about being aggressive. So being contra, and we've spoke about that. I think one of the sessions was about the fund manager Michael Burry, if you remember, the guy from what's that movie? What was that movie called? Guys, do you remember the name of that movie? Which was about the subprime crisis, in which Christian Bale and a few other A-grade actors were there. Skipping my mind. It was about 2008 subprime. Inside. It was an Oscar-winning movie, if I'm not wrong, or Academy Award. They won something for sure. can't get my head around it. It's so close. I'm just not able to get it. The Big Short. So that fund manager of Big Short who predicted the crisis. So he was contra-investing. Contra-investing is contradictory to what other people are doing. Only those people are great in advisory or management or coaching, because if you are doing what everyone else is doing, you will get what everyone else is getting, and that is what the index is. तो वही करना है तो इतनी मेहनत लगाने की क्या जरूरत है? Just start an SIP, put it into index and forget everything. You don't need to learn anything. You don't need to go through any of these sessions, right? But that's not the objective. Now we want to decrease our time span of achieving financial freedom. We want to be smarter with money. We don't want to take higher risk. For that, we are doing all of this. So that's exactly what Warren Buffett is talking about here. Is it a good time to move from SGP? You mean SGB, sovereign gold bond, right? So no, do not exit from sovereign gold bond. If you have to exit from debt, or if you have to exit from other investments which are not efficient. SGBs we hold. If we buy something, we have done enough research into it that in almost all cases, it might take longer, but it always will give us the desired result only. So exiting NCDs would be a better method, because the whole point of investing into NCDs was, if we don't get any opportunity, we will wait till the maturity and get our 8%, 9%, 10%, 11, 12%, whatever NCD you invested in. Or we exit early, might not make the full return of the NCD, but the opportunity cost of investing in, let's say, equity might give you 30%, 40% return. So 2-3% अगर आपको कम मिल भी गया, it doesn't matter, because you're going to get a lot more out of it. So, and this is a beautiful statement of Warren Buffett. He says that the best thing to do in inflation times like these is just be exceptionally good at something what you do. If you're the best in whatever is it that you do, people will going to pay you well, and that value cannot be destroyed by inflation, and nobody can take that away from you, because you're talented in doing what you're doing, which is what you're, like I keep on blabbing, your passion, your purpose, hone your skills, work with utmost dedication to help the end person really benefit out of it. All of that is what? The same thing. So inflation at 10% or 15% doesn't matter. You can hike your prices. Like just about this masterclass course itself was a 3-month course where we were charging 25,000. Then we made it a year course for 40,000. Now that has moved to 65,000. I am, by the way, I haven't told you, I am making a 2.0 version of masterclass, which will be an upgraded versions of the recordings. Will be more structured, more informative, and more detailed, with more clarity. And I'm looking to make the masterclass course a 1 lakh rupees course, because that is the kind of effort and money and systems that we're putting into it. We are very soon going to have our mobile app as well, which will be exclusively for our students. So those kind of things, when you create such value, you're able to charge more. And then inflation doesn't matter. You look to work with people who understand and appreciate the value of it. And that is simply what we're trying to do here. So whatever the inflation may be, if you're putting your heart into something, if you're really talented, if you're passionate in doing it, is inflation or inflation, you're not affected, because you are able to have the price authority at it. Isn't it so?